Does the Fed chair really move markets? This is BWS.
A lot of investors talk about the Fed chair as if one person can control the whole market. But the truth is more complicated than that. The Fed chair matters a lot, but the market is not a one-button machine. Yes. That's the key point. The Fed chair can shape expectations, but the chair does not operate alone. Monetary policy is formed through a broader process, and markets are driven by inflation, growth, liquidity, and global conditions. So when people say, the Fed moved the market, what they really mean is that the market reacted to a policy signal, not that one person controlled everything? Exactly. Markets often move on expectations. A single speech, a change in tone, or a shift in rate guidance can reprice assets quickly. But that reaction is still happening inside a much bigger macro environment. Let's bring in a historic example. Paul Volcker is probably the most famous Fed chair of the modern era. He took over during a period of very high inflation, and his name became linked to one of the toughest anti-inflation campaigns in U.S. history. Right. Volcker is widely remembered for aggressive policy tightening in the early 1980s. That helped bring inflation down, but it also came with serious economic pain, including a recession and a sharp rise in unemployment. So Volcker shows something important: the Fed chair can be powerful, but the chair is still reacting to the problem in front of him. Exactly. He could influence the pace and force of policy, but he could not invent the economic backdrop. Inflation, expectations, and financial conditions were already driving the story. Another classic Fed chair is William McChesney Martin Jr., who is closely associated with the line about taking away the punch bowl when the party gets good. That line is famous for a reason. It captures the basic job of a central bank, not to create the party, but to prevent the party from turning into a problem. And that's why the Fed chair is such a fascinating role. The job sounds simple from the outside, but in practice it means balancing growth, inflation, and market expectations at the same time. That balance is never easy. Tighten too early, and you risk slowing the economy. Stay too loose for too long, and you risk letting inflation take hold. There is no perfect move, only trade-offs. Now let's talk about Jerome Powell. Investors are watching both the policy path and the leadership question very closely. They are. Powell has said he does not intend to leave the Fed board before the DOJ investigation is resolved, and Reuters has reported that his future has become part of the broader discussion around Fed leadership. At the same time, Kevin Warsh has been nominated and is moving through the confirmation process. So this is not just a personnel story. It is also a story about continuity, credibility, and how markets read policy signals. Exactly. Markets dislike uncertainty, especially when inflation and growth are still being reassessed. A change in leadership can matter, but its impact depends on the broader economic setting. Warsh is often seen as someone who would put a stronger emphasis on price stability. That makes him an important figure in the current debate. That's fair. Some investors view him as more hawkish than Powell. But any Fed chair still has to work within the committee structure and respond to incoming data. So the real question is not whether one person can command the market. It is whether that person changes the way the market thinks about the next few months. Exactly. A Fed chair can change the rhythm of policy, the tone of communication, and the path of expectations. But long-term market direction also depends on inflation, earnings, credit conditions, technology, and global events. In other words, the chair can influence the pace, but not write the whole script. That's the cleanest way to put it. So if Powell stays a little longer, the market may see that as continuity. If Warsh eventually takes over, the market may expect a different style. But in either case, the Fed chair is only one part of a much larger system. Exactly. That is why the office matters so much, and why it is also easy to overstate what one person can do. Thanks for your time. Please subscribe. See you next time.